There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Hello.
It's time for Fari Tales. How you doing,
What's
Fari?
going on?
What's going on? You tell us what's going on. You told
Oh,
us,
I'm just a poor dumb immigrant. What do I know?
You told us last Wednesday that you were looking for a pop, and we got one heck of a pop, and you know we didn't talk to you on Thursday, so we don't know what you were thinking Thursday. We gave it all back, and now S&Ps are sitting above some major support here, Fari. What do you think? What are your Sigma channels telling you?
Well, it's not just a Sigma channel. Remember, no chart is going to tell you everything. You look at preponderance of evidence, young man, right? Remember, you're in court of law. Here, what I look at is, for example, what is Russell is doing. The Russell action is very dangerous. We're broken 50, we're broken 200. We're in negative 2 Sigma channel. Look at the chart pattern we've had like 5-6 days. Very ominous. We're not going to go up without this thing working itself out. Fortunately, at least locally, IMW or Russell, which you're looking at, is beginning to get into oversold area. At least we'll have a little pop there. In terms of SPX, we put in line with the call I had. We bought a call spread. It's underwater right now. I think we're up 10% only. Okay, it ran up quite fast the next day. We should have taken the profit, but like a schmuck that we are, if you look up the dictionary, learn the schmuck, you see my picture there. Same one that's on Twitter. All right. The next day, you saw what happened. Boom, negated. So, market is it's got some math and physics in it, some kinetic energy, but it's not science. A little bit of art. Or unfortunately, the signal was not perfect. Now, what are we getting set up for? I talked about it on the Twitter yesterday afternoon near the close. I don't know if it was after the close or right before the close. And I got actually a lot of traffic. People were jumping on all that, asking questions. We got some emails. As a matter of fact, I was just answering some emails this morning. It's that we're the two key items we've talked about that's crucial. Up and down volume ratio, okay, and where we are on McKinnon oscillator. Potentially, okay, I want to make sure I get some very naive questions from people. Every question is important. I'm not, putting anybody up or down. I've been there. That's how I came up myself. We'll have to start somewhere. But potentially, we could be set up for a launchpad mode. Last time we had launchpad mode like this was in November 2012, which was not a super hot one, like day after Thanksgiving of 2011. But it is a launchpad mode, which is we need to have two conditions that are required. Very low reading of McClellan oscillator, negative 350 and lower, 380, 375, 350 negative, okay, readings. Remember, we don't get into oversold until we pass negative 150 anyway. Right now we had negative 162. We spent 2 days in the last trailing 5 days at 220 and 240, okay, negative. So we got to set up there. We're not at a flush yet, but we will be shortly, hopefully. And then we need a different pattern on up and down. Down to up volume ratio. I can send you guys charts if you need be. We have to spike up, which we have. We did on that day that I got a little fried there. The day after my call, on the 25th, our reading was 8 to 1. I'd like to see possibly around a 10. It was 10 to 1, 10.04. 10.04. I'd like to see something less than 10, okay, but above 5. So more than 5 to 1. So kind of a good flush, not a super flush necessarily, in terms of volume ratios. It has to be less than that with a lower price in S&P. So that creates a divergence. Now, if we get a negative 12, okay, we're still going, okay, because we need to see the energy leaving the market from internals. Remember, as my good friend Brian Shannon says, which you guys interviewed, price pays. Only price pays. I agree with him. But remember, I've been trading since 1993, investing from 80s. But what you need to look at is the internals. Internals will tell you ahead what the price is going to be. Except one caveat: you got to look at the right internals. The internals are a dime a dozen. It's like opinions. Look, the other day Kyle had an opinion on the market. We all have opinions. Mine, yours, his. To be honest with you, Twitter has created an environment where opinions are a dime a dozen because there's so many of them out there. So the issue is, can we get to a spike in up and down volume above 5, below 10-ish area? So some energy is leaving from the 10 reading with a lower price of SPX. I think by then, and given what I see on the trender on IMW or Russell, which is the last time we were this low, about negative 5%, below the 200 bar. Right now, Russell yesterday closed 4.3% negative below 200 bar. That's a rubber band effect. Okay. Last time we did that, it was November 2012, about mid-November, like 15, 18th. Go back, which was the election time. Go back, see what happened. And then you got 2-3 months forward. It just doesn't look back.
Okay,
why?
Fari,
Because the big money is coming. Go ahead, sir.
So, if I'm reading you correctly, we have all these lows set up in the S&Ps at like 1955.50. That's a major level. So the potential scenario is you go flush everybody out that's leaning on that level, right?
Right.
You take it down to 1952, 1953. You get bears like me sitting all fat and happy. Get a real
exactly. And then you see one more thing. We're in the Navy. You're going to see baby with bathwater coming out of torpedo tubes.
Okay.
They're throwing everything out.
Okay. I mean,
once you see the baby with bathwater through torpedo tubes, be ready.
And
because the pain, you know why? Pain is too much.
Right.
Market is there to what? To go to maximum pain. Correct?
Okay. So we'll keep. I mean, I've been caught in that scenario too. Let's switch subjects a little bit. And
yes, sir.
Rob Hood is coming up with a question, and Dennis and I want to get your take on it. Do you follow the TRIN at all? And if you follow it, is it relative in this environment?
Right. Yeah, TRIN we do. We post the chart on. It's coming to a buy. We post the chart on Hunter Killer Sub. That's outside Hunter Killer Sub. That is the Seawolf class of submarines. That's our logo. You see that on Saturday, or was it? Yeah, it was Saturday. And we said, look at the sell signal it gave. The sell signal it gave. Look at the 5-day trend. I don't use trend. Trend is too noisy. I use 5-day trend versus 10-day trend. Okay. The cyan line is 5. The red line is what do you call it? The 10-day. Look at the 5-day. It went underneath the 0.08 sell signal on the 18th. We still ran up 2 more days before we hit the high. A good indicator is the one that gives you advance warning, correct? You don't want anything in reverse. You know, if you get a signal in reverse, your broker can do that too. Big deal. You want something in advance of the price. It gave 2 days for the sell signal. That is, you have 2 days advance time. The sell is coming. Beautiful run. Now we're at 1.31, the 5-day. Okay, 10-day is 1.19. The buy signal is 1.6. I'll post a chart on my Twitter instantly. What we were talking about, have you? But you'll see we have just had a good sell signal. We're racing to our buy signal. Now, one caveat. This is Abacus era. It's very old. The reason they did this was because things were needed to keep things simple. CPUs were not powerful. You didn't have transmission power. And you didn't have memory. Biggest problem was memory. So the old computers, what you have now in your iPad used to take a room. So this was created. So it's a very, what I call Abacus era. We can do a lot better, but some old timers still look at it. It has also give you a lot of false positives. Make sure you realize that. It gives you false positives. That's why sometimes I make a comment and say, hey, take this with a grain of salt.
Okay, another question for you coming from the chat. Rob Hood is asking about this death cross, and they have been talking about this on CNBC for the last
Comedy Central,
2
you mean?
weeks. 2 weeks we've just been hearing death cross, the Russell 2000 crossing, the 2 moving averages crossing there. They've been talking about this forever and saying this is going to be doomed for the market. We've kind of laughed it off here on the Pre-Market Prep Show, but Rob wants your opinion on the death cross. Is this the doom for the market? Because I personally don't think it is.
Well, if you look at it, we had a very close to a death cross in mid-June. on Russell. Do you agree with that? 50 and 200. It almost became a kiss. It wasn't a cross. He came and touched it and pulled back up. This is like I'll give you a date, approximately June 20th. Okay. And then now we've crossed. We crossed, which was the outside bar on the 19th of September. I think you should pay attention to it. But but remember, when everybody's talking about it, I take the other side. That's sentiment 101. And that's why I like Twitter, because I read, I sit there, I have fun with it. I read at night. It's like if I can't watch Seinfeld, I watch Twitter. Okay, it's another funny stuff, looking at it and so forth. I think you need to go further than that, because everybody's looking at dead cross. Think about D-Trender. That D-Trender is what? Difference between the price and its moving average. And you need two of them, 50 and 200. Now, if you look at those two, you'll see what's going on a little bit better. You get a little bit ahead of the crowd, because everybody's talking about dead crosses. And, if they're all talking about ad nauseum, we all know where that goes. I can't. Right now, we're further out. You cannot say no, but I think we'll at least have one more bounce coming. Look, generally speaking, the economy is not that bad. It is difficult for some people, but obviously that's in every economy. The data has been coming reasonably well. You do have a fear about. I think the biggest problem people have is how to factor in what the Fed is going to do, how it's going to happen with the interest rate changes. And you got a couple of hawks that running their mouth off early. I think we're in uncharted territory, and again, opinions of a dime a dozen. We just have to wait this one out and see what happens. What I do it? I look at order flow. I come in the day, I look at order flow, I trade order flow. At the end of the night, I say, okay, what is the synthesis? Where are we? What happened? What's the aggregate? I step back a few steps, go from hourly to daily and weekly. Forget about the 15 minutes and 30 minutes. Come in the morning time, again, what's 15 minutes, what's 30 minutes? I made a comment in AWACS yesterday, looking at 51 target. Some little kid is making a comment about it, like saying, hey, what happened to that? Listen, AWACS is adaptive. At the moment we have the reversal, we look at 70. 7170. We don't put everything on Twitter. That's for our paid members. Obviously, we have 4 chat rooms. There's no way we can cannibalize that. The point is, you need to have adaptive systems that adjust. Opinions of dime a dozen. All you need one crazy situation. For example, who would have known with Bill Gross leaving PIMCO would create a mess he did with the bonds? We had a tsunami in bonds for a day or so. Remember? So it happens. We are susceptible. The higher you go, you're susceptible to any possible bad news. So, trading, I said that to trading station guys the other day. I said trading is going to get tougher and tougher. And one of them asked, what do you mean? I can't put that down here. They're doing an interview with me on some of this stuff. I said, listen, it's just the way it feels that. Look at the technology. Look at all the advances we have. Look at all the people who have got all this fighting their heads against each other. Obviously, it's not going to get easier. So you take it day at a time. You're careful on your bet size. I am using less bet size. Okay, I am less and less bet sizes. I think it makes me think better, makes me take profits faster. I'm not, going for a holy grail right now. I'm just saying, look, that pot of gold is yours. I'll take a few shekels right now.
Fari, what are your thoughts here on the Ebola scare here? That's what everybody is talking about here this morning. We're seeing some of these Ebola drug stocks like TKMR flying up this morning, but we're also seeing a big drop in the airline stocks here. Is this overblown? Is this Ebola scare from this one case in Dallas, or is this just the start of something that could be pretty scary?
I'm not on my area. That's infectious disease specialist area.
That's how you do everything,
I do have a number of, I do have a lot of doctors who are clients, but I would refer to them. Yeah, this is a specialist area. Generally speaking, any epidemic with the close proximity. Look, they said the world got closer and smaller due to 747. But Boeing came up with 747. It changed our world. It's very true. Travel, and now we got very cheap travel because of all the competition, right? So it is actually scary. My sister just came back from Eastern Europe. She had gone to, I think, Budapest and Vienna for vacation. I was worried about it, even there. Not for because of Ebola, but just things are different out there, okay? This is a problem of lack of proper health protocol and tools and services over in Western Africa. And obviously, we're much better tooled here. The problem with Ebola, from what I read or I saw, is a delay. When this guy came back from Liberia, he had no problems. Nobody knew there was any. On the several days after. The problem is he also went back home. This is people around you can get this relatively easily from body fluids, coughing, and all that stuff. So, I don't know. It's beyond my pay grade. But I would be worried. I would be worried.
Okay, so what are your thoughts here on the overall market then? Because we've obviously had concerns here overseas, and now we get concerns from Ebola. We've had tension still over in Ukraine. There's still a lot of things here that are putting pressure on the overall market, and we are 50 points off the highs here now. We had the big death cross too. Do you think? Are you positioning yourself a little bit more cautiously here now, Fari?
Yeah, I would be. It's seasonality also, but also keep in mind, this is it's like 666 on the what do you call it? It's March 9th, 2009. When you get low, it's an opportunity too. It's a challenge. I would look at it as such that we're vulnerable. People, we want to have excuse to sell. Once the interior gets low and flushed enough, you'll see a wave of buying coming in, especially when we are where we are, and those managers who are behind. Remember, there are a lot of managers who are behind in performance. They all want to get shekels. It's called bonus. Okay, the big shekels check called bonus for the year end. So they may have to jump back in. I look at this as opportunity at the right time. So we all have to be a little bit patient. Sometimes the chart is speaking to you, but you're not listening. Okay, you got to pay attention to be patient. My attitude is, this is what I learned from Steve Chauvin, advisor to Soros. Okay, head of technical for Lehman, head of options for Merrill. Markets will walk the wall of worry. Nothing new. It's been in a market community for years, but market will walk up the wall of worry. When we get all these negativity out there, that's my kind of market. I'll start nibbling in.
And what about?
I'll add to my bet size. I'll add a little bit cash. I'll add a little bit option.
Okay.
But futures is a different problem because you got such a huge leverage.
What
futures,
about,
you cannot go there and sit back.
What about Ethan?
You really need to look at what I'm doing in the next 15, 20, 30 minutes, what my targets look like and get out. And you need to have adaptive systems. But in terms of wall of worry, they don't come off it. That's an opportunity. Let's see what market brings us.
And how's this shaping up with Ethan's thesis? How's he doing on this? I know that.
He's it. I was very scared for a while with that high beta strangles. But one by one, he gets one leg in, pretty good, and the other one you let go. Boom. You get that because of the two sides.
Correct.
His SPX bets, some of them are come back. It was a little bit on a longer term. He just put some bets on for, I think, March 2015.
Okay.
He's doing reasonably good. His S&P calls during the day, the intraday, as you know, he's got a market letter in the morning that comes up. His ES calls, his ES call has been on the mark. I mean, a couple of days, I was just speechless. I said, for a guy from Florida, he can do this well? Holy mackerel.
Okay.
No, but he's good.
All right, Fari. Thanks a lot for coming on. Fari Hamzei of Hamzei Analytics, always giving us his colorful and learned interpretation of the markets. We'll look for your scenarios to play out today, Fari. As always, thanks for coming on, and we'll for sure speak to you next week.
It's a pleasure to be with you any day. Thank you, sir.
All right.
Thanks, Dennis.
Thanks, Fari.